All right, evening everyone. It's Saturday. I wasn't able to do a video on Thursday or Friday. Bit of a shame. And I've actually got a holiday coming up next week, so I'll try to do some daily videos, but no guarantees there. Anyway, my last video was on Wednesday, and we closed up that day. Thursday and Friday was just continuation. I was wondering whether we were going to break 400, which we almost did on Thursday, but obviously Friday was a very strong close, which is all the more significant because weekly candles do count. So we have a nice, strong, engulfing weekly candle on the SPY. And obviously, it's the same across all the four major indices. So now the next question is, where is next resistance? So we identified support a long time ago along this ascending line across all the four indices. We bounced there. My general thesis has been so far that we continue sideways to up and then lose this ascending support and then test this old support of 388, not too old, obviously, 388.50, let's say, whatever, thereabouts. And then we go lower to test the next one, 372, and then the all-time low, which coincides with interest rates peaking. We'll look at interest rates later. So next resistance, sorry, would be 419/420. I always tend to think it's just below. So if you do want to sell, whether it's the SPY or a stock that moves alongside the SPY, it would be just below 420. Obviously, we have this tiny gap here, and we have the descending major trend line. So resistance can be expected here, which is where I've got this big circular. Maybe it's a bit too big, but I think you get the idea. Thereabouts. Obviously it depends what happens next week, what news we have, maybe some breaking news, something unforeseeable. So my general thesis is we tend to go up, maybe we'll go down a little bit, up, whatever, we go sideways to up, and I still think we break down. Now, how much of a move is needed to test this resistance? 3.5%. That can be done in 2 days, 2 strong days. The way the market closed, you can expect Monday to go up at least at some point. But then again, the world keeps turning. So with Saturday now, Sunday, something big can happen. Whether it's in Ukraine, whether it's something in, I don't know, China, wherever, something can still happen on Sunday, even though the markets are closed. And then we open Monday lower. Let's see, a natural disaster, for example. But it was a strong close. So, and as you can see, the pennant is getting tight. Now we could obviously, go up, break out of this pennant, and then still fall down. The next resistance will still be just above. So even though this is for me, this would be significant breaking out of this pennant, we would still have next resistance here at 430. And it's a nice round number. So 420, 430 on the SPY. Let's just see what happens. I will definitely make a video. No promises, but I'll definitely try to make a video if we are testing this zone and even breaking out. What would this equate to on the Nasdaq? You can see very similar. So let's call it 320, and then maybe 334-ish. I mean, the thing about the Nasdaq is it moves a little more, as you can see here, up 2% when the SPY was 1.5. So I still think the SPY, the S&P 500, does dictate the market more than the Nasdaq. If I can make that statement. But anyway, you can expect the same sort of momentum. So will we test how much of a move is required to test this next resistance? 4%. Yeah, that's 4.5%. That's pretty much the same as the SPY making 3.5%. So yeah, let's see what happens. A very strong close also. Definitely short-term bullish. But still, my thesis would be, we go here, maybe we test, fail, test. I don't want to draw this right now, but, test up here, or maybe just fail it, go down, and then eventually just break down below this ascending support. And then as always, just test the previous support and then break down lower. I won't do the same for all of them because they've all got the same pattern. So the Dow Same sort of bounce, probably a little bit less of a move. Yeah, 3.5%. And the Russell, always very aggressive on the way up. Yeah, this has more work to do. And actually, it's got a bit of a different chart pattern, the Russell. But I mean, here you can expect the first resistance to be, around 195. And the next one, obviously, this would require all the other indices to break out of that tight pennant and then test the next resistance up here. Let's call it 200 or just a bit above. So let's see what happens. Very, very short term bullish, but medium term bearish, long term bearish. Let's look at the dollar because that also may have been a reason for the markets moving higher. Obviously, I had more of an impact with commodities, but we did notice that the dollar, I don't usually go on a monthly, but just so it all fits on one screen nicely, you can see the dollar had hit resistance on this top side, this ascending resistance. So, and it is asking quite a lot for it to just keep going up to test 120. It can still do it. It probably will still do it actually, but I still think, and I said this in prior videos, I do think we can break down a little bit at least and still be pretty extended. So I think 108-ish, 107, 108 is one support, and then just 106. Let's go to the daily actually. You can still see this ascending support. And I remember when it was breaking down here, people were bearish the dollar at that point. I thought, now we still haven't broken down, and then we make new highs. But look, we didn't make that much of a new high. And this is a bit of an exhausting candle. So, and I identified it on this red day here. That was a pretty bearish close. I'm talking about this one here on the 7th of September. I think that was my last video actually. The next day, sort of sideways, indecisive, but then obviously on Friday, it was a big flush. Now, it did recuperate some of those losses, but I still think we sort of go sideways to down. This could be the market going up, could even go lower. This could be the market testing the breakout of that pennant. But then I still think we have to bounce here at least a little bit. Will we then go and make new highs? I just don't know. Obviously no one knows. This is just all educational, advice. Let's say this is not financial advice. It's just my own opinion, as they always say in all the videos. How much of a move down is this? 2%? Yeah, that can happen. We'd still be in a very bullish pattern though if we come down here. So let's see, go down here, bounce, test the next, the prior resistance, let's call it 110, and then we'll see what happens. The DXY is a basket of other currencies, mainly the euro and Japanese yen. Japanese yen we'll look at too. Let's look at the euro dollar chart though. Obviously everyone's been looking at that 1-to-1. We've been hovering just below, basically been hovering at $1-to-1 dollar parity. Now, if you look at this, and these are my favorite chart patterns, breaking out the down trend line. And you can see we tested just above prior days resistance. So it was pretty bullish. If we can venture sideways and break out of this one, let's call it 101 by the time we get there, then okay, 102 is the next resistance. Then 103, pretty convenient numbers. But yeah, I do think we could break out of this and just go up a little bit. How much of a move from here? Maybe we could do 3-4% move on the euro, and that could probably lead the dollar down here. So that's something to be wary of, and that could help markets. The dollar doesn't always guarantee the market's going up when it goes down, but it's definitely a bit of a tailwind, especially for commodities. Let's look at the US dollar, Japanese yen. Obviously, that came down. Pretty crazy chart. I wouldn't expect this to come all the way down the way the Japanese central bank is positioned with its just constant guaranteeing of buying bonds, but maybe at least come back down to prior resistance to test it as support. So how much of a move down would that be? To, it could go a little bit further below, let's say down here, 137, 138. So you can expect and obviously this is US dollar, Japanese yen, you can expect the dollar to fall against the Japanese yen, the euro to go up against the dollar a little bit, just a small breakout here, and have the dollar just sort of just venture low between this zone I could have just made one big circle in between these two. But yeah, this sort of zone I expected to fall down to and find support. Let's see. So that's just something I noticed on the dollar. Let's look at interest rates, which tend to move also with the dollar. Now, actually, they tend to move together. So if the dollar goes up, interest rates also tend to go up. Now, didn't happen on Friday, but obviously both have been strong for a while. So, and yeah, interest rates didn't move too much. Now, I've added a few extra rates to my watch list. That's being the 1 year and the 5 year. I didn't have to, but the most important are the 2s, the 10s, and the 30s, in my opinion. The 1 year is just paints a very obvious picture. We're just going up. The 2 year, and okay, the 1 year and the 2 year did the same thing, but again, the 2 year being slightly more significant. You can tell the 2 year closed at a new high, which is, in my opinion, slightly significant. So we're still going up, rates are still going up. And that fundamentally is the most important barometer of the market. That is the thing that can break markets out of nowhere. That's the black swan trigger. I mean, aside natural disasters, wars, and pandemics, and all this sort of stuff, interest rates can just all of a sudden break very important institutions or sectors and just send things going crazy very quickly. So for me, fundamentally, the interest rate's always worth paying attention to. So the 2 year closed at a new high. The 5 year didn't, but that's not the point. We're still very strong, hovering just below old highs. The 10 year, possibly the most important of them all, the benchmark rate. So also hovering, and it doesn't take much for it to go up to test old highs of 350, a nice round number. And if you remember 350, this sort of middle of June, we look at the SPY, where were we middle of June? We were testing the lows. So it doesn't take much for the interest rates to go all the way back up to test all highs. What do you think would happen to the SPY if the interest rates start going up? Chow, straight back down to this ascending support, probably on the same day, flushing it, and we're very quickly testing the lows. And by then, everyone will remember, oh yeah, we're going up in interest rates. What the hell am I buying stocks for on a breakout here? So I think this is the reality check area. And the 30 just hovering around highs. So interest rates are still strong. And you got the central banks just constantly trying to not reassure markets, but just reiterate that, hey, we're serious on interest rates, And I don't think they mind taking out the market. They've actually said it in a few speeches. Powell said, look, we're gonna, crush demand, or whatever the phrases he uses, but they don't really care about the stock market. They prefer it to be up, but it's second to inflation. They really want to tame inflation, and to be honest, they've got a long way to go. And it's going to take some time. And they've said that, they're not just going to settle, 1 or 2 months we have a low inflation reading. No, they want to have it for some time, and they want to try and get it back to 2%, even the government numbers. So yeah, I think interest rates are painting a ugly story, and it's something that the general markets are sort of avoiding. But again, we're just bouncing here. So pay attention to interest rates. If they keep moving up, we're very, very close to that old high, and the markets remember where they were and how much of a move down from just, let's say, the SPY to the lows, 10%. That can be done in 1.5, 2 weeks in an orderly decline, but in a chaotic decline, it can be done in a week, definitely. So yeah. Next, I will look at the GDX and the GDXJ. Actually, I'll look at gold and silver. Yeah, let's look at gold and silver before we look at the actual sectors. So you'd expect gold to have done probably a bit of a better move towards the end of the week, because the dollar was down, the markets were up, and Gold is sort of moving with the markets and obviously inversely to the dollar. It didn't do that well. Now, maybe I should zoom in a little bit. Maybe the 1 hour is better. We sort of, we were testing the lows, 1680-ish. We hovered, we broke out of this downtrend line, but we didn't really break out of the next resistance point being sort of 1730. So that was a bit of a failure for gold. 1730 seems to be a pretty strong resistance for now, but still, if the market goes up next week, and if the dollar, probably more importantly, if the dollar continues lower, I would expect the gold to take it out and then test its next resistance, which by then would be around 1750. I don't like to have too many lines, but these are relevant in my opinion because, okay, we took out this sort of short-term one. The next one here is, kind of a big one. It's the one stretching out from here. I don't know how accurate it is, but yeah, it's still worthy because the more times the wick touches, the more credible it is. And this is actually the longest, the one going longest, furthest out. So to me, that's relevant. 1750 is a nice number, and I'm just trying to predict where we would be on the day if we were to take out 1730. So 1750-ish is a nice number too. So yeah, I'd say 1750. And to be honest, the next resistance, which would be this descending trend line, is pretty much the same area. So whether it's 1750, 1760, I would say that would be a general sell zone. We'll just take some off the table, whether it's gold or something gold related. So gold, not too impressive, but still up for the last 3 days there. Silver was a bit better. This is what you'd expect from gold, actually. Silver being the more aggressive metal. So yeah, I took out this descending line, and obviously we had continuation. So Wednesday, Thursday, Friday. Next resistance would be 19.4, I would say, which is, yeah, 3%. That still requires 1 or 2 days, maybe one good day. So yeah, if the dollar does that move, you could expect silver to test 19.4, maybe even higher. Now, if we look at the miners, and I will start with the the seniors, the GDX, you can see very similar chart pattern. Probably looks more like silver than gold, but obviously this follows the market more than the metal does. But obviously it follows the market and the metal. If they're both up, it's going to have a nice day, but they follow the markets more. So we had a very nice Friday, and this does look more like the SPY than gold. So SPY plus silver equals this, I would say. And we closed very strong at the high of day. Just very quickly look at the GDXJ, even more aggressive. This is a bit like the silver of the sector. GDXJ is always more aggressive than GDX. It's the juniors, but also closed at high of day and at or even beyond resistance. So a very strong close. I sold a tiny bit. I'll go through that later, just because we're at resistance, no matter how good it looks and how I do expect a bit of continuation. Always forget the emotion and trade the charts, price action, trend lines. That's just through experience. I don't really care about emotion anymore. I just almost robotically do it. So yeah, just generally very, very strong, very, very strong breaking out of descending. And if we zoom out, we could easily bounce a lot more. And there are sorry, there are periods where the miners completely ignore the markets. Now that hasn't been the case for some time, which is why I trade them like the markets. But there are times where they trade inversely. I remember when we made new highs here in April, the market was flushing down the toilet, and a lot of people were very bullish, thinking, okay, that's it. The war had also given a bit of a boost. So this was a period where we were acting inversely, but then the market started to fall down so much, everything came down. That's when you have total capitulation, everyone's selling everything to meet margin calls. It's just when chaos reigns supreme and liquidity is required. Old school 2008 style. So anyway, miners closed very strong. The GDXJ closed beyond its trend line, so very, very nice. I look at the portfolio very quickly, Newmont, which is one of my heaviest holdings, kind of a defensive play because it's been crushed. It's a great senior stock, good dividend, 5%, I think. But unfortunately, it doesn't go up too much because it's such a heavy senior defensive one. I still expect it to make a nice move if the miners do, but only up 2%, nothing crazy. But also, it's not totally accurate, but also closing at the downtrend line breakout. So let's see what happens if we have continuation in the markets in the sector. Then I'd expect 4 or 5%, maybe even test its old 46.5-ish resistance. So Newmont, not the biggest move, but still at that significant downtrend line level. Agnico Eagle, very, very strong, probably the best senior at the moment. Merged with Kirkland. So this obviously had a nice bounce. Won't take much for it to test its old highs. You know, unlike Newmont that requires 7%, this is only 4. And then we move to the next level, whether it's 50, I would say. So very strong. I hadn't traded Newmont, Agnico, or actually Barrick Gold. I bought at 1501 down here. I didn't own any, so I added some here. I thought it was a bit too early because I thought the markets would keep going down, but no regrets now. So Barrick Gold, I always wanted to buy that. It's a, Warren Buffett sort of stock. Yamana, which I'd sold a while ago down here, I bought it back down here on the trend line. It wasn't the stock that was the most depressed. There were a lot of more depressed stocks, but it's a very good one. It merged with Goldfields and for a higher price. So I think it's kind of guaranteed to get a better price than where I bought it, which was 431 or something. But obviously it requires the sector to keep going up to get a better price. But anyway, I'm pretty happy with that buy. Wheaton, I don't think I traded that at all. And you can see that close at the descending line. Also, a lot of them will do that, will have the same chart pattern. This is a very good royalty stock though, so a very good buy overall. Pan American Silver, such a good buy. I haven't traded that in a while, I don't think. I've just held what I had. I should have bought some, but I don't think I did. Just because I have enough of it at the moment. But yeah, I expect good things from Pan American Silver. Very good stock, silver stock. Mag Silver, bought a little bit of that because that had a very good earnings, came all the way back down. I thought, you know what? Although you have other stocks like, let's say, Pan American Silver that are destroyed down here, that have more upside. Mag Silver had good news recently, so it's more likely to bounce stronger, and that's what happened. I forgot where I bought it, but it was on this drop, and I'm obviously up on it. So I didn't buy, I added to it. These have been core holdings. Barrick Gold I didn't have before. And Yamana I used to have, closed the whole position, reopened one tranche, nothing too heavy. Goldfields I bought at 820, a bit too early as it was coming down. And it went below 8. I was a bit upset, but obviously things look good. It'll probably go to $9 pretty quickly if there's any continuation. First Majestic, I didn't trade it. It was the one of the four, these four here, silver aggressive stocks that I didn't buy on the way down because it hadn't moved as far down. The value was still pretty strong in my portfolio. This looks very strong, actually. I must admit, a breakout of this, we go straight to 9 and probably run to 10 or 1080 or something. This looks very strong. I really like the look of this technicals, but it needs the sector to perform and the metals to perform. So let's see if the dollar coming down helps silver up, because this mainly trades silver. So yeah, First Majestic, great stock. This is one I did add to, nothing too crazy. I just added what I'd sold on the last pump up. Looks good. These can really move a lot though. I mean, if there is any breakout of this zone, 20% very quickly, easily. EXK did the same thing. I'd bought, just taken out this last low because I'd sold this move up. So basically I bought back what I sold here. And it's a very nice move because, 25% in, out. And that's how you really build your account. If you trade the ranges, you know, I've got a core position, fine, comes up here, sell. You have the discipline to wait, it flushes. I still thought that the market would go low, but I just thought, now at least buy back what you sold, because I got a lot of cash on the sidelines. So if it goes down, good. And that's what the cash is there for, to buy real flushes, but at least buy back. Don't be too greedy on the way down. It's not just people who are greedy on the way up, it's also greedy on the way down. So EXK bought that back. Same chart pattern, you know, downtrend line, also closed above it. If that's accurate enough, it is. Cal Darlene also bought back what I'd sold here. Another one that I can expect huge moves up. I mean, again, you know, broke out of the downtrend line, very quickly test this old high of 330. That could be done in one day, no problem. And then immediately at 360, I mean, 17% can be done in 3 days. It really can. 40% in 2 weeks. I've seen these types of moves, Carl Darlene. So, but actually, this one here, I trimmed a little bit because I bought some down here and it was quite a move. And just because, and this is the only stock I sold actually on Friday, because everything looked good. But I just thought, Carl Darlene actually was worth a bit too much. I got quite a lot of value in that one. I thought, okay, just in case it comes down, let me just trim it just so that it's a more manageable position on the way down. So I sold that. I still think it's going to go up though. Grand Columbia, something I bought down here because not only was it testing its lows, the value of the holding had dropped because I trimmed some over here and it had good news. So I'd sold some, which I wanted to buy back. Plus, it had good news recently. I think it's a merger or something, but a really well digested merger by the market. I thought just buy some, even if it goes lower. And you know, we're near the old March 2020 lows, so I bought some. Well, I actually bought back what I sold there, and let's see what happens. If it comes back here, I might trim again the same amount that I trimmed here, which is the same amount I bought back here, at least the amount of value of shares, not the value, and then let the rest ride. Because again, these are all long-term holds. I'm not here to day trade them. I will swing them. I will sort of, you know, sell and buy a little bit here and there because I think that's what really makes you money. But you've got to have a core thesis. My core thesis for all of these are their long-term holds. The other ones, these actually have been trading, just they haven't been trading. TGLDF has just been closed for a few days. No one's traded this. Same, kind of the same with TVXXF, Termalina. I think they're great long-term holds. These are, you know, they can just open up sort of plus 200% one day, especially on news, maybe more. So these, you just have to know the company, know the CEO a little bit, and then, which I think I do, and I just believe in them long term. I don't think they'll go bankrupt. And if they don't go bankrupt, they'll get bought out or they'll just end up being worth more than $1. I remember them trading, sorry, all the way up here. I remember these days. And to be honest, they were worth higher when they were here. So, and nothing's changed since. So you just gotta know what you hold. But anyway, these haven't really been trading. Fortitude. This is a really good stock. 8% dividend. Great mine. Strange chart because it was spin off from Goro. I owned it from the beginning. This was a very strange day. I actually got scared and wanted to sell it because of the bid ask spread was just weird. And then I didn't. And then before you know it, just went all the way up. And I think I trimmed a little bit in this zone, held the rest, and now it's stabilized as a normal stock. It's trading a bit more normally, but to be honest, it was a bit weird. Wednesday, Thursday, Friday, it's just hovering around here whilst the rest of them are going up. So I add a little bit at 601, but I would expect it to go down actually because what doesn't go up will go down. So if the sector just keeps going up and this doesn't move up, or if the sector moves down, this will go down. But that's fine because I don't own that much anymore since I've been selling. I was using this as the gold stock I was selling the most as a hedge on the way down. So as these were going down, Fortitude was holding its own, you know, a lot, and I would just sell it. So I haven't owned a lot of it for some time, and now I'm just trying to rebuild my position. So if it goes down, good. And I think it will, because it's a bad close and the sector's already made a run. So Rain of Silver, this one I bought at 221 or something. 221. Anyway, had a nice move. I sold at 26 what I bought down here. That being this sort of circular zone. And it was good news. I don't know why it was moving up so much. I don't care about the news. I just sold it anyway. Um, so that was a nice sort of 17% move or something. If it goes higher, I'll sell some more, because then we hit this downtrend line. And if it goes even higher, I'll probably close the whole position, but I don't expect that. So this was a nice surprise. And the rest are not gold, silver related. So I'll end it there. I will try and make another video on crypto and another video on my alternative stock holdings, but just want to go through the main markets, the main sectors, and the gold and silver portfolio. Let's see what happens next week. I hope to make more videos. I expect, generally, just to recap, the markets to go sideways to up for a few days, 1 or 2 days. But I think we will, reality will hit, whether it's interest rates, inflation, the war with Ukraine, energy. Watch out for some bailouts in energy. And it's quite funny because you've got everyone trying to bail out these energy companies, but that's inflationary, and inflation is the number one threat. So how does that work? It doesn't. Something's going to break, whether it's in Europe or elsewhere. I don't know. You have black swans all over the place. It's not just China and Ukraine. I mean, look, there was a shooting incident between the Greeks and the Turks. Just think, I don't know, like, too much can go wrong, and we don't even need a geopolitical black swan event. Everything was going wrong before the Ukraine war and the energy crisis. We already had inflation and the market's going down. So we have absolutely every reason, the perfect storm for the markets to continue lower. And normally I don't care about news, especially when it comes to individual stocks, but I mean, whether it's the news or the macroeconomic background, I really think we're going to go lower. I don't think I don't think we're just going to go here, break out, continue higher. What the hell? It just wouldn't make any sense. So good luck. Let's see. I look forward to making a few more videos. Yeah, please comment, subscribe, like, all that stuff. Yeah. Otherwise, have a good weekend.